Aloha folks, thank you so much for checking out this video. If you are new to the channel, my name is Mark, Mr. Dividend Investor. In this channel, we look at great dividend companies that we invest on. So if that's something you're interested in and you want to learn about which companies to invest on to create that passive income where you get dividend payments weekly or monthly, definitely hit that subscribe button. Don't forget to hit the notification bell so you don't miss out on some of these companies that I look at. Also, if you are interested in some of the companies, hit me up, put it in the comment section. I'll definitely go check it out and see if that's something that we can look at and see if that's a possible company to invest on. With that said, let's take a look at this company that is 50% undervalued, as well as there's a 46% upside, and it's been giving 14 years dividend streaks for the past 14 years. So without any more delays, the company that we are looking at is Williams Sonoma. Ticker symbol is WSM. If you're not familiar with this company, it is a company that engages in retail of home products. So if you want to learn a little bit more, they do a lot of these products that you can use at home, coming from pots and pans to utensils. Pretty good, solid products that you use on everyday things at home. Definitely enjoy some of these products that are in that company. So let's take a quick look. In Seeking Alpha, way back in February 12, 2021, there was an article that says, is Williams Sonoma a good stock investment? So if you ever want to read this, then check out Seeking Alpha. But in a nutshell, it talks about how it has potential for long-term growth. If we look down further, you can see one of the strong ones is the company's balance sheet is very strong. So that is something that I also look at. So in conclusion, you can see the firm has a very strong balance sheet and demonstrated willingness to buy back shares. So if you want to learn a little bit more about it, check it out. Now if we go over to Simply Safe Dividend, based on their safety dividend score, they rate it as 80, which is safe. The dividend yield of this is 2.14. Market cap is about 9.6 billion, which is a mid cap. Now if we look further down, you can see key metrics. Payout ratio is about 18%, which is very low for most companies. During a recession, they have maintained their dividend during the 07-09. Again, the dividend streak of 14 years without a reduction. So if we look at dividend growth, last 10 years, 13%, which is very fast. For the past 5 years, 8%, which is fast. And then the latest is 20%, which is very fast. So you can see from 2006 all the way down to 2021, or this is 2022 now. You can see a steady upward trend. They kind of had a little bit of a flattening here, but then as the years go, pretty solid 14 years, 11 years of consecutive increases. Now, if you're wondering about the payment details, you get paid quarterly in the months of February, May, August, and November. Your annual payout will be $2.84 per share. That comes out to about 71 cents. As you can see, the ex-dividend date is June 20, which has passed, and then you get your February 25th payout. Going down to the evaluation, you can see the stock could be overvalued. So I'll continue to give other sources in here, but for Simply Safe Dividend, they feel that it is overvalued. Now, if we look down further to some of the financials, you can see sales growth. Look at that. Look at that. Last 12 months has been up 27%. Now you can see that total sales in billions. Now if we look at the return on investment capital, you can see last 12 months 47%. Return on equity 70%, which is above the 10 preferences. Now if we go over to tip ranks, at the time of this video it is at 132. Their rating is a moderate buy based on 10. You have about 6 buy and 4 hold. Analysis price target, they feel that it's a 46% upside, 194. And then for the 12-month forecast, they rate it as a high of 245. They average about 194 and then the low of 160. Now if we look down to some of the analysis, you can see pretty bullish for most of them. You got 50% upside, which is a buy. Then you got some that are hold, but then they still feel that it has an upside as well. So if you go down here, you can see just a couple of sells, but majority of it you can see it's mostly a buy, which is good. Now if we look at CNN Business, based on their price forecast, you can see another 41% increase from the price target. Their forecast is in the 250, the median 187, and the low of 140. Analysis recommendations, about 7 buys, 11 holds. There's some sells in there. Yeah. Now let's swing by to Barchart. Looking at their price target, pretty similar, about 250, 195 is the medium, and then 160 is the low. Average analysis rating, they feel it's a hold. You can see 3 months is pretty similar based on 19 analysis. Now looking at the breakdown, you can see 5 strong buy, 2 moderate buy, 9 holds, 1 moderate sell, and 2 strong sell. Now we swing by a little bit more to Barchart. You can see their technical opinion. They feel like it's a strong sell, 80% strong sell. Now if you look at the 1-year chart, you can see it has been going down. Yeah. So if you look at the 6-month, it's still going down. So one of the things I look at is some of the resistance and the support level. So at the time of the video is 132. Based on the key turning points, you can see first support level is about 128, second support level is about 124, and then you got your third one. And then you got your resistance here of 138, second resistance of 143, and then your third one is 147. Now let's switch off to Simply Wall Street based on their evaluation versus a share price and fair value. So Simply Wall Street feels that this is a 53% undervalued. So their fair value of this company is about 284. At the time of this video is 132. Now if we go over to the company overview, you can see no risk detected for the stuff. Again, flawless balance sheet with solid track record and pays a dividend. So now we swing by to Robinhood. At the time of this video, it was down -5. For the week, it's down -12. For the month, it's down -5. 3 months is down -38%. For the year, it's up only 5%, and for 5 years, it's up 174. As you can see, the last 3 months has been on a downward trend, so it's still finding, in my opinion, still looking for that resistance bar. Yeah. Now if we look at some of the analysis, you can see it is a hold based on 48%. You got your buy of 36 and sell of 16. Now looking at the research, their fair value is about 209. Just to stuff earnings is at March 16. So what do I think of this? I think it's a great buy, but given the conditions that we're having with the situation in Europe, you know, who knows, this might even go down. So I'm going to definitely put it on my watch list. I like this company. I think it has some potential. You know, if I do plan on buying it, probably no more than 25 shares. It's not going to be a major player in my portfolio, but I do like this company. I think it's very solid, so I definitely think it's a buy. All right, guys. Also, check me out on Instagram. Same name, Mr. Dividend Investor. So I do a lot of posts there as well. And also, if you're interested in other videos, other dividend videos, definitely check out my other videos as well. As always, please remember I'm not a financial advisor. This is just my opinion. As always, please stay cool, keep investing, and I'll catch you guys in the next video, right? Take care. Aloha.